Time for another stock review. This time we are talking desktop metal, DM, Danger Mouse. Yes, we're talking metal now, solid metal, AI technology. We're talking about engineering, all of that in this video. So let's get ready for some great information now from the world of engineering. And this is made during a live video, so anything can happen in this show. We've got live conversation, live members now. Anything can happen, and these reviews are all real, all honest, unbiased. I'm not paid or sponsored to do these reviews. It's done as for members' perks. No one sponsors me to say talk great about a company. I just give you the facts, so my members can make an informed decision of what they want to invest in. So during this review, if you tap the subscribe button, oh, hello, look at this.
Eat more than a piece chicken and a can of Coke and treat Leah too. That woman sounds like a gem. So this one is for you both.
Well, that is incredible. Wow, look at that. I just had a donation from MSK to take Leah for dinner tonight. And Vincent Vosberg, live in the show, has also said, and get yourself a beer as well. So Vincent Vosberg has just given me another super chat. This is very kind, made during a live video. Right, let's get into it. I'll take Leah for dinner after I finish then. What a great idea. Thank you so much. I'll take her to a steakhouse down the road. You'll love that. So this is the numbers. We're going to give you a profitability score, a solvency score, see who's buying on the inside, we'll see who's selling on the inside, and you can decide whether it's a right for you to buy this company. All right. So all the information is real using the most advanced algorithmic software. On this one as well, we're also going to be able to share with you a full back test, so some latest news on the company, what the company is all about, plus a back test comparing it to the S&P. So all of this is coming up in this video. Wow, look at this. And someone else has just done a super chat as well. Thank you very much indeed, Paul Knowles. That's very, very kind of you. Thank you so much indeed. You'll see it in a second. Right, so let's get straight into it. Thank you so much.
And a beer.
And a beer, Vincent Vosberg. Right. What is DM? Danger Mouse, we're talking. What is the company all about? How can we invest in this? Well, let's have a little look. Desktop Metal engages in the manufacture and additive manufacturing solutions accessible to engineering, design, and manufacturing applications. It operates through the following geographical segments: Americas, Europe, Middle East and Africa, and Asia Pacific. The firm offers 3D printing machines. It was founded by Ric Fulop, Emanuel Sachs, Ric Chin, Jonah Hart, Ming Chiang, Christopher A. Schuh, and Jonah Myerberg in October 2015, and is headquartered in Burlington, MA. The listed name of the company is DM, Danger Mouse, Ric Fulop. Now then, I never message anyone. I don't believe in it. It's not what I do. But I don't believe in selling myself. Always undersell and over-deliver. But expect Ric Fulop to hear from my investor army. They're called the Lucasades. They will share this video on social media, so it'll trend all over the place. Your company will be very well known within a week. They may even email you at Investor Relations. We have a Meet the CEO series. Come on my show. Tell me all about your company. I am here to help great companies, help people that are employed by those companies, bring information to those that can invest for their futures, and technologies that can help and better the world. So if you'd like to be on my show, please do reach out to me. You have an open invitation, and I know my investors will contact you to make it so. They will make it so. All right, let's carry on. Now, if you were buying this on margin, it's 100% maintenance. It's regarded as very high risk. Average volume is 3.7 million. No dividend. Its price to earnings ratio is negative 0.36. So it is losing money at the moment. And 177 is the market cap. 52-week high is $2.55, and 52-week low is 45 cents. Okay, fantastic. Thank you very much for that. I've just had an update of some information. GBX is pence. There we go. So that's in pence. Thank you for bringing that information to us, Paul Knowles. Just learned something there. Is British pence, GBX. We're learning something all the time. I wonder what GBX stood for. GBX pence. All right. Thank you very much indeed. Now then, let's have a look at the earnings and see where we are with this company. It has been going pretty much sideways apart from this one event here, Q1 of 23. Oh, hang on.
Add some crisps and nuts for your meal out.
And some crisps and nuts. There we go. We've got a nice meal with a beer and some crisps and some nuts. All we need now is a pavlova with some custard on it, and we've got the full meal. Anybody want to get me a pavlova? This is made during a live video in case you're wondering what's going on. All my videos are. So as you can see, we are moving up now nicely. Steadily going up, but we did miss on the last earnings. We'd like to know what happened there. Now, who are we in bed with? Who else is buying this stock? Nano Dimension, I've never covered it. Open Door, good company. Palantir, good company. Great for the future, but overbought all the time because it's so far into the future. It's fantastic. SoFi could have been great, but the CEO talks rubbish, makes up stuff all the time to promote his stock. So I cannot talk about that. Okay, let's have a look at the numbers. We are looking to see if there is a way we can make money from this stock, and if the money stacks up, and if we can print some money. So get our heads down, scratch our chins, and look at the numbers. Let's go over now to the website and see what we can find over there. All right, so here we go. This is the website itself. We've got some news here. They want to share. We're more than metal now. This has just come out. At Desktop Metal, our portfolio of Team DM brands was carefully curated by the brightest engineering minds to drive the future of additive manufacturing 2.0 or production volume 3D printing. We've paired 3D printing technologies that we view as truly production capable with performance materials and select applications and technologies to help drive the next generation of additive. Achieving this goal requires speeds and costs that compete with conventional manufacturing, as well as the levels of uptime and reliability in 3D printing. Our team employees are passionate in the belief that AM 2.0 technologies can deliver more advanced parts and products that can truly change the world at high, meaningful volumes. From lighter, smarter vehicles to new sources of energy to completely customizable patent care products, our team is aggressively pursuing a sustainable and modern manufacturing technology future. I got some news as well that's just out just a week or so ago that the company want to share, and I apologize for looking to the left of the screen. I have to look at a mirror screen when they write in such small text. Desktop Health announces Flexera Base Ultra Plus. Oh, hello. Got a new subscriber, Vitorino, thank you. Plus dental resin for stronger, more comfortable 3D printing dentures. 3D printed dentures. Can you believe it? Flexera Base Ultra Plus is a 3D printable light curable resin used for the fabrication of the gingiva component of full and partial removable dentures. So we're now printing, can you believe this? We're now printing 3D printing dentures. Incredible. The technology just keeps advancing. You never know what's coming next. All right. So there's some latest news, but this company wanted to stress that they are not just metal. Exist to deliver on the vision of 3D printing mass production. This is what their website looks like. Very interesting. This is a 3D printer at work here. Can you imagine? You'd have your dentures printed in there soon. Love it. Maybe they'd send me something in. Print me something. There you go. I'm reaching out to the company. If any of my Lucasades here would email investor relations, send me something 3D printed and I'll share it with the world. Very, very excited. I tell you what, I like the website. I like the website. It's very clean. Very clean. I like that. Very sophisticated mouse. Look at that. 3D print me a car. How the world is going to change, eh? 650 patents as well. They've protected a lot of their technology. Look at all this. Oh, hang on.
and a glass of a good whiskey. Yeehaw.
And a glass of a good whiskey. Well, I love a good whiskey. You know I do. You know I do. Love a glass of whiskey. Absolutely right. So there's all the 3D printers. Now, that's all very well and good. Vaz, thank you for the super chat. Very, very kind. Now we've looked at that. Let's look at the numbers. Does this company make sense? Because if it doesn't make sense, we can't make any money, right? It's all very well having all this latest technology. Very, very exciting. But can we reach out and grab some money? Well, let's have a look and let's hope so. Desktop Metal. Let's go and look at the numbers now. Have you tapped the like button? Have you tapped subscribe button? Have you done all the good stuff? Have you? Okay. Let's have a look then at the valuations. Looking at the valuation, the intrinsic valuation, it appears to be undervalued by 71%. Great value. So it looks like we are undervalued at the moment, 71% undervalue on the base case. On the best case scenario was 72% undervalue, and the worst case scenario, 69% undervalue. Is it reliable? Sadly not. The intrinsic value estimates is unreliable because it's based on multiples and doesn't use DCF valuation. If you're not familiar what an intrinsic value is, there it is. Pause the screen. Have you paused me? Now unpause me and we can carry on with the video. Okay, I don't know why I go when you pause me, because if you pause me, I'd be like that, just paused. I wouldn't put a face, would I? I mean, you know. Just saying. So the intrinsic value appears to make the stock look undervalued. However, it's not reliable. We can't use it as a reliable. And we can't even do a back test. It's unavailable as well. Okay, not enough information here so far. Okay, in Q3 23, the most recent earnings, the company observed a 9.2% drop in consolidated revenue to 42.8 million from Q3's 47 million. So we had a drop in income, influenced by a strategic shift away from lower quality product lines and extended sales cycles. Despite underperformance, there's a pivot to high margin recurring revenues and confidence in stronger year-end results, supported by a 190 basis point improvement in non-GAAP gross margin to 21.9%. Operating expenses were cut significantly, predicting a positive shift in gross margins beyond 30% in Q4 and into 2024, or even modest revenue growth. Adjusted EBITDA showed a 27% year-over-year improvement, and guidance for Q4 revenue is projected between 50 million and 70 million, with adjusted EBITDA expected to range from negative 10 million to positive 10 million. So a mixed bag there on the earnings. Now, if we look at the financials, how the company is improving, have you tapped the like button so far? Have you clicked subscribe or rung the bell? Are we making money? Have you decided that this stock can print money? Well, there's some good and there's some bad news, obviously, so far in this review. Let's continue to see what we find. The revenue is 197.9 million, down 2% on the most recent range. We're expecting to go sideways for the rest of 24 and then to take off again. That's a good time to buy a stock. Operating income is up 7%, and we're expecting that to increase dramatically. Very good. Net income also up 3% over the recent range, and we're expecting it to climb considerably going forward. The cash flow is up 13% of the most recent range, still negative of 128. Negative capital expenditure. We're spending a little bit less now. We've spent a lot more now. What they are, as they said in the earnings, they're cutting expenses, which is good. We've spent money, we built the business, now we're cutting expenses. That's good. Operating cash flow is up 13%. That's also good. The balance sheet, at first look, looks pretty healthy. That's how much debt they've got. 644 million in assets, and of which 100 million is in cash. Very, very good so far. 238 million in liabilities, and long-term debt, however, is 40, I believe that's 47% of their liabilities is long-term debt. That's not good. That equates to 113 million of debt. But on the other side of the balance sheet, we have 108. So we could wipe out our debt. They obviously feel the debt is affordable. Rates are going to come down, so that will be a catalyst for the stock, and they have enough cash to clear it should they wish to do so. So the balance sheet doesn't look too bad. Even though they've got some debt, they've got cash to pay it off. So that's not bad. Margins are expecting to improve, and they have been improving, as we heard in the earnings. Things looking better there, and expected to continue getting better. So all of that looks relatively positive. Profitability at the moment is low. They explained that on the earnings that they had a drop, but now expecting things to turn around. So now is potentially a good price, a good time, because the stock is expected to do better going forward, and you can now buy the stock at 54 cents. 16% is the profitability score. What about the balance sheet? Well, the balance sheet would dictate 43% solvency. So the company isn't going bust. It's got plenty of cash. Its balance sheet is on the good side of it. They can clear all their debts. So they are in a pretty good position from a point of view of solvency. Okay, Wall Street give this worst case scenario a 59% upswing, 75% on average, and 94%. So it's a 1x. You can double your money if you believe this high range here. Moving on down to the competitors. If you want to look at the competitors, I'll give you a link to my website services, this software, and you can check it out yourself by clicking above my head or down below in the description, and you can get a free use of my software. Or if you want the premium version, my members get a lifetime discount, which gives you, basically makes my membership for free. Okay, now then, inside trading. Sadly, we can only report that insiders have been selling the stock, but the last time it was sold was back here in November 23. So a few months ago now it was sold. There's been no buying or selling since then. Okay. Shareholder return, you can see that. If you want to pause that, you can when you get to that and have a quick look at that. Now then, the news, there's no news. Again, we'll probably rank for this on YouTube and Google within a few days because there's only been latest news 9 months ago. No one's reviewing it. There's no sentiment over the last 7 days, last 30 days, nothing. 90 days, we've just got some neutral news of 6%. Very little news. Very little interest in this stock at the moment. No short. Hang on a minute. Short interest, 25.28. Excessive shorts positions. Anything above 20 is excessive. 100% was what GameStop had when it pumped. But 25% is excessive with volume. A short squeeze is on the cards. Do we have volume? Well, we can look at the stock there, and we can look at the average volume, which is 3.39. Today's volume is 2.54. So no, we would need volume in the region of 10 million, 12 million, 15 million, something like that. A positive catalyst. There's been a bit of positive news in the report. I've shared with you some news from the company. Could be some good news around the corner, potentially. They're expecting earnings to improve later on this year, into next year. Could be good. Get some volume. The stock is low. You could see the stock move up. I'd need more information, though, on this one to make a call on it, I'm afraid. So coming back to the review, there's no more information I can get from there. We've covered the news. I can give you, though, on this one, a back test. I can give you a back test on this one. So let me do that right now. Have you tapped the like button so far? What do you think? What do you think so far? Rubbish? Any good? You like it? You don't like it? Do something. Okay, can we make some money on this stock? Well, let's go and have a look now at the numbers. See if it all stacks up to see if we can actually make money. Now, comparing it to the S&P 500 in red, over the period since 2020, you would have turned 10,000 into 15,000 on the S&P 500. So that's very nice indeed. Whereas if you bought Desktop Metal back in 2020, your 10,000 would mean you're now worth $650. Now, I believe 3D printing is one for the future. I don't know about this stock yet. I would prefer an ETF, but you don't know which 3D company is going to come out on top, do you? But this one is interesting. I'm not going to make a call on it, though, I'm afraid. I don't have enough information on it. The intrinsic value doesn't give me enough information. There's no real sentiment at the moment. There's not much news around the stock. Nothing to really give me an indication where it's likely to go. We've had some selling from the insiders, not for a while, no buying, nothing there. No latest news. Wall Street is giving it a good upswing, though. The solvency, they're not going bankrupt. They're not going to go bankrupt for a period of time. They've got a good runway, good balance sheet. At least they've got the cash to clear the debts off. So with a little bit of, and a lot of short interest, with a little bit of good news, with a little bit of some positive news, maybe on a future earnings that things are actually looking better, with the amount of short interest that we've got, bit of good news, something positive, then the stock potentially with some volume could short squeeze. So I can't give this one a buy. It's a potential buy, though, if you like a gamble type of stock. There's not enough information to give us a real true valuation. However, with some volume, this could do well, but we need more information. I like 3D printing. The company has got a reasonable balance sheet. It's got a decent amount of cash. And with volume, with a short interest, the fact it's not being talked about, we could easily get this stock talked about within a week on our channel. Wouldn't be surprised if we could get the CEO on the show. Potentially, this could be a winner. So I'm just going to say one for further research, potential buy. Click above my head, more information down below in the description. You've got all the links there to Alpha Spread and so on. And over here and down here, I'll put all my reviews and I do the Meet the CEO series and all those things. Until next time, as always, take care of yourselves and each other.